in a constant state of fear and misery. Do you miss me anymore? And live in a constant state of fear and misery. Do live in a constant state of fear and misery. Do you miss me anymore?
Hello, everybody. So today is Sunday, February 17th, and we are bringing you Block Digest number 157 at block height 563,476. What is up?
Ooh, man, I don't know. It's just been a crazy morning, crazy week. A lot of stuff been going on, trying to keep up with it all, but doing good throughout it all. So how are you doing this morning, Janine?
Yep, I'm good. Just very late today.
That's all right. We all got our mornings for sure. We got a lot of stuff to handle. So we are here, though. It is Sunday. It is time to get through the news, and it looks like... Whoop.
What's going on?
Oh, okay. I'm sorry. I had my YouTube still live, so I was hearing an echo. Sorry about that. I thought everybody was hearing the echo, but I'm fine now.
Like I said, totally did not do that. That is totally not why the intro song was echoing. You guys were all hallucinating.
Yeah, it's been hectic, man. But we are here. Things are in order, and everybody's here. We got through the intro song. Let's start getting into the madness, or let's get into some cool stuff before the madness, huh?
What? There's nothing cool here. This is just a bunch of databases. Why are you trying to give people false hope of things to be excited about?
I don't know, man. I've been digging this new Block Explorer, and it looks like we got a little bit of an update to it.
Yep. So, Blockstream has dropped some updates for their Explorer framework and their instance of that, the Blockstream Explorer. And this has fixed a couple of issues and set things up to be very nice going forward. So obviously anybody who's been using it has noticed that it doesn't properly register addresses with a very high amount of transactions in their history. This was due to kind of some issues with the database on the back end. So that has been pretty much completely redesigned and re-architected. And as of now, the Explorer has no issues tracking address history, regardless of how many transactions they've been involved with in the past. So this is pretty much the one big shortcoming, I would say, when this first went live. So that has been dealt with. As well, something I have been waiting for that is really awesome. They have set things up so that it can properly function without any use of JavaScript. So for those who are security minded and like having that shut off unless absolutely necessary, this is a huge bonus. You're no longer going to have to expose yourself potentially to any JavaScript enabled vulnerabilities. And as well, that's especially in handy when taking advantage of their Tor hidden service, which allows you to actually directly connect to this Block Explorer through Tor within the Tor network, not having to depend on an exit node and still connect over the ClearNet in the end. So that is a big issue, as you know, when you're dealing with Tor, you still have to be very security minded in terms of any kind of data leaks or fingerprints you're giving out when you're connecting to things. And JavaScript is a big gaping hole there, usually disabled by default when using Tor. So this is just a general security improvement, as well as something that makes use of the Explorer over Tor hidden service a lot more airtight. As well, they have added an API endpoint and a web form to allow broadcasting transactions, especially over Tor. So this I am very excited about, because this is something that a lot of block explorers out there, they do have services like this for, but none of the other block explorers out there really allow you to directly connect over Tor. And so this, I think, is really a huge thing in terms of network level privacy when it comes to propagating your transactions. Like this, like connecting over Tor is something that allows you to obscure your identity when you're broadcasting the transaction. So there's really no serious worry about being de-anonymized simply by providing a transaction, as long as you're connecting over Tor. And the API endpoint support, most importantly, I think, allows wallets potentially, or other software for managing your Bitcoins, to directly connect to this as a means of broadcasting transactions. And the thing I like about this is if this is widely used and people start, modifying or building software to use this to broadcast their transactions, you pick up a huge anonymity set. And done over Tor, you're preventing them from actually identifying where they're getting the transaction from. And as far as broadcasting it to the wider Bitcoin network, like, you're hiding in a huge anonymity set. Like, this is something I see a lot where, people don't like transactions being broadcast through a centralized point. But in reality, that is a good thing. Because if you're covering your tracks and giving that service or that node your transaction so they can't tie it to anything, then all the network at large sees is this central node that's broadcasting transactions to the network for all kinds of people. And that makes it exponentially more difficult to try to perform any kind of network analysis and tie those transactions to an individual person. So you cover your base when you give them the transaction, and then all the network at large sees is just a giant flood of transactions from who knows where. Like, it all just blends together into a much larger anonymity set. And as well, they have made a few different tweaks. They have QR code scanning via the browser enabled. They've set up the transaction pages so that it actually shows the block timestamps for when they were confirmed. And they've also started numbering the inputs and outputs of transactions. So just a little technical detail that might be more useful for people testing or trying to gather data for things they're building. And so, this is really shaping up to be one of the best block explorers out there. Because, one thing like almost nobody really thinks about is when you're using a block explorer, like, really think about what you use that for. You're either just futzing around looking at random things, in which case, okay, it doesn't matter. Or you're looking at it to find information about your transactions and coins. And when you connect to that block explorer, they're logging all of that. They see your IP address, they see what you're looking at, and they can correlate those two things. So running a block explorer is potentially a huge resource in terms of data mining and a huge risk to privacy. And Blockstream, aside from their pledge not to log anything, has architected the whole design to make it as secure and private as possible. Like I've gone over, like, you can connect directly over Tor through a hidden service, not require JavaScript, so limiting any kind of exploit that could compromise your use of Tor. And even if they are lying and logging things, like, they still can't tie it to an individual person. And so this whole architecture is really just a huge leap forward in terms of dealing with a systemic privacy risk in this space that almost no one really appreciates. And, to boot, the whole thing is open source. So people can literally just grab this code base and boot up even more instances like Bitcoin Magazine has. Like, I actually wasn't really aware of this until I saw this update from Blockstream, but apparently since January 2nd, Bitcoin Magazine now has their own instance of this code base, their own block explorer on their website. So now, like, this isn't like you have to depend on Blockstream. Like, anybody who wants to set up and run an explorer that is actually dealing with these privacy risks can just take this code base and set up their own instance. And so hopefully I would like to see this really lead to a huge shift in the ecosystem and really start seeing a lot of these explorers that people are more used to start getting some competition and getting knocked out of usage. Because, you know, like I said, this is a huge systemic risk to users' privacies when you sit and think about how people use block explorers. And that's something that needs to be dealt with.
Yeah, I mean, it's really good to see, you know, Blockstream build out this Explorer. I mean, like, it was so good to just finally get off of blockchain.info, like you're saying. I mean, if you're looking through a block explorer, odds are you're checking your transactions or your addresses. And when you go to those guys, you know, that information is not really working with the best group of individuals. And, you know, just a little bit, definitely a lot bit, you know, more confident whenever working with Blockstream, and you see what they're doing with Liquid and building out privacy features. And like you're saying, I mean, there's a lot of confusion out there about what it entails for you to stay private on the network, and how that's all done, and whether something is decentralized or centralized. And I mean, you know, as long as all the checkpoints through the system that you're going through add up to where your anonymity set is going to be at its greatest, I mean, that's where you're in your best position. I mean, a lot of these, you know, other networks like to say that, you know, you're private as soon as you enter the network, but we know the way that they, you know, you enter the network or you exit the network, there's usually ways to get found out. And yeah, I mean, like, just the idea that they enabled this API endpoint for broadcasting transactions, like you're saying, I mean, the potential there for people to build out around that, and you know, with the Tor hidden services enabled, I mean, that does bring a pretty damn big anonymity set. Whereas if you want to start broadcasting transactions through this Explorer, and yeah, it's just great that they have it all open source. You know, people could check through it. They can enable it for you know, for their website as their block explorer, and just you know, create it in their own way. I mean, I really like what Blockstream's doing, and I, you know, as far as people in the space that have like a ethical alignment with Bitcoin, it's hard to say there's anybody, you know, that's better.
I mean, you know, people have been, you know, for years now looking at Blockstream and going, what the fuck are they even doing? And like over the last year or so, I mean, they have just knocked shit out of the park. Like, Liquid is live now. The satellite feed is pretty much covering every inch of the world except Antarctica and parts of the Middle East. Like, there's work on simplicity rolling forward. All of the things they've done for Lightning so far, the charge implementation to start integrating into, you know, shopping carts and so on, this block explorer, like, they were just quiet for years, and then all of a sudden there was just a fucking torrent of like shit that came flooding out, and I don't think it's going to stop anytime soon.
Yeah, I mean, what did you have to think about this Explorer, Janine? Have you used it yet?
Yes, I have, and I've also noticed that, for example, educational texts, whenever they're referencing transactions now, or transaction data, block data, they are starting to use Blockstream, the Blockstream Explorer, a lot more often than I'm seeing blockchain.info, which is really great because blockchain.info sucks on so many levels. I was kind of, because Shinobi, you might want to use different words than a stream of shit. That's very colorful language. I don't know if that's a good use of words.
Oh yeah, that's a pretty good descriptor there.
Blockstream is dumping a stream of shit that smells like roses on our heads, and I love it.
All right. Yeah. So, I mean, if you guys haven't checked out the Blockstream Explorer, now's a good time to go check it out. I mean, they just got through with this update, and like we're saying, it's sleek, it's nice, and hey, if you want to, plug it into your back end of your site or something, it's all open source. So go grab the code.
Mm-hmm. Alrighty.
So who else is putting a stream of shit down on the space?
Well, Mr. Jamie Dimon and JP Morgan Chase recently announced a JPM coin, a new digital coin for payments. And I don't even really know where to fucking start. I guess let's just go with what it's built on. So this is being built out right now on Quorum, their private permissioned fork of the Ethereum blockchain. And to toot my own horn a little bit here, I mean, this actually happening and something being built out and prototyped on top of that, I think is going a long way to showing what I think is just the inevitable end for Ethereum. And that's literally just devolving into a scripting language for a bunch of private bank databases. And if Ethereum can't do that, then it's just going to die because it's just useless, unscalable, and insecure. So the Quorum was actually something that they started working on after they pulled out of R3 a year or two ago, that Amber Baldet was the head of, if I recall correctly, although she, I think over the last year or so, left JP Morgan to go work on her own Ethereum nonsense building on public blockchains. So as far as JPM coin itself, let's quote their website. JPM coin is a digital coin designed to make instantaneous payments using blockchain technology. Exchanging value, such as money, between different parties over a blockchain requires a digital currency. So we created the JPM coin. I'm going to read that and say that they just took a little step towards acknowledging that it's Bitcoin and not blockchain. Because for years, they have been spewing nonsense about blockchain, not Bitcoin. You don't need a token or a native currency. And in doing this, they've kind of taken the first step towards walking that back. So the architecture, pretty much what they're going to be doing is just creating a stable coin, holding dollars in a designated account in JP Morgan Chase North America, and then redeeming that for coins. And so pretty much like this is just a run-of-the-mill stable coin. Like the idea is you limit your counterparty risk to the one counterparty holding the assets, in this case JP Morgan. You can shuffle those coins around anywhere quickly and cheaply and just get your dollars at the end of the day from JP Morgan. So really, it's this Tether. They invented Tether, except it's on a private permission chain instead of a public chain, which honestly makes it inferior to Tether because the ability to actually audit the movement and supply of coins is not really there for the public at large. It's just a database that they maintain themselves. And the real ironic thing, I think, here is some of their rationale and justifications. So they have a section in this this website for it called "How Does JPM Coin Differ from Other Cryptocurrencies?" And so they have public crypto like Bitcoin, which is uncollateralized and value is intrinsic to the coin. They have fiat-backed stable coins, USDC Tether. Reserves are held at a bank. Transparency about adequacy of collateral varies by stablecoin. Most stable coins claim to have a one-to-one fiat collateral. And then JPM coin, one-to-one redeemable in fiat currency held by JP Morgan. Huh. That's such a differentiating thing compared to stuff like Tether and USDC. It's absolutely one-to-one redeemable. I'm not just claiming that. You can trust me, bro. And like the ultimate irony of this is that because JPM is based on a private permission chain, they can lock you out of even transacting with it. So something like Tether, like, yeah, you need to go through KYC. You need to have an account at an exchange or Tether themselves to actually redeem a Tether token for fiat deposits in a bank. But the coin itself is open. Like if I today decided that Bitcoin is going to drop to $1,000, I can sell all my Bitcoin for Tether. I can move that Tether to my own private keys, and I can sit there and hold on to it until Bitcoin gets to $1,000 and buy 3 times the Bitcoin back. And nobody can stop me. I might have to get people's permission to go turn that into money in my bank, but I can sit there and hold it. I can lock my value into the value of the US dollar with it. JPM coin, you can't even do that because it's just a private database that JP Morgan has, and you need their permission to even transact or hold it. And so what they're doing here is literally just what Gemini is doing, what Circle and Coinbase are doing. They're trying to compete with Tether, except getting worse and worse at it, because they don't like the fact that this token created by an upstart Hong Kong company can just eat into all of their arbitrage in this space. You know, I've said this multiple times when we've talked about Tether on this show. If it weren't for Tether, to arbitrage Bitcoin, you need to wire fiat through the banks. It needs to move through all the correspondent banks, pay fees all along the way, and the banks all get their cut. But Tether completely fucked that up. And so what JP Morgan is doing is trying to get that piece of the pie that they're losing back before it starts growing big enough to really start fucking with them. And they have gone further than any other stablecoin issuer out there in terms of locking a system down, preventing anybody from using it without their permission. And like ultimately, all they're really doing is validating the use for this, validating the technology behind it. And ultimately, what I think is going to happen is probably just pushing people into things like Tether, because they see that if JP Morgan is doing this, it makes sense. It's a rational thing. And like really it's them just scrambling to not get completely obliterated by this space. Crickety crickety.
Oh man, I almost don't even want to talk about it. Like I can't. I'm glad you grabbed this story, man, because like as soon as I saw the news breaking, I was just like, oh no, we got to talk about Dimon again and what he thinks is going on and the way that he sees this world and envisions it. And yeah, I mean, it's no surprise that they're just all backwards on this and they're not really figuring anything out. I mean, where is the efficiency gain? I mean, even if it brings it all the way down to where like Ethereum's the scripting language for this, you know, JPM coin and on their Quorum blockchain. I mean, like, where is the efficiency, Jamie? Like, and that's where, I don't know, maybe this is them just trying to figure out this stuff where they're still experimenting around. I mean, it's hard for me to say that they're doing this like because they know that this is the best way to scam people or something. I really think they don't know what they're doing and they're just figuring it out as they go along. And the same goes with the Ethereum crew. And I know that Zcash is tied up in that as well. And just, yeah, it's really just a pretty upsetting part of the space that these guys get so much attention just because of who they are in the traditional sector and everything, and you know that they get all the headlines. But you know, I mean, hopefully these headlines, people will start reading through it and they'll start figuring out that, yeah, you know, this is BS. Like, really, if you want to do something that's actually an added efficiency towards the system, it needs to be permissionless, and that these permission systems are just overly complicated databases that are not really solving any problems, because at the end of the day, you're still having to trust a small group of individuals. And yeah, it's just like, where's the efficiency in all of this? It gets a little maddening at times, but you know, it's at least we get to crack wise about him, old Dimon and his delusions. What else did you got to say about this, man?
I think they know exactly what they're doing. They're looking at things like Tether as a huge threat to their involvement in the space, while they're trying to navigate what's going on. I mean, like all of these major banks, like JP Morgan included, have been talking about crypto products for more than a year now. And they've been hesitant, they've been cautious, they've been worried about regulators. And they're getting their lunch eaten by somebody else. Like, back to stepping up. Multiple, you know, institutions involved in the legacy stock market are stepping up to build crypto products. Like, investment funds that were born in this space are stepping up to get involved. You have things like Tether and USDC, which is actually pushed by Goldman Sachs, a competitor, you know, popping up, and those things eat into the arbitrage movements that would have to have fees paid to the bank. And they're worried. Like, they want to stop this. They want to be able to jump in this space, but they're falling way behind, and they're way overcompensating for this. I mean, like, really, if like Tether keeps chugging along, they keep redeeming coins that come to them, they keep sucking in more capital. Like, why on earth would you go to JP Morgan with all of this baggage and this inefficiency if there's something much simpler to use that seems trustworthy? Like, they're trying to claw into this stable coin space and establish themselves before, like, they lose their seat at the table.
Yeah, I mean, it's hard to imagine that they're going to have a seat at this table. I mean, you got things like Tether out there, and I mean, really, the way I see it is like that liquid sidechain is going to probably be the master for stable coins. I mean, if you really want to create some system that has like some permission there, but you know, people can still come in and come out of the system, and you can have you know, levels of privacy built on top of it, and I mean, that's seems to be the answer. I don't know why everybody just thinks that they have to create their own and sort of carve out their little spot whenever, like, technically it just looks like it's going to get eaten out. But I mean, you know, over time, I guess we'll see. But did you have anything to say on Jamie Dimon's JPM coin, Janine? I know it's not that interesting, but come on, you got something for us.
I mean, it's just like, I wouldn't even give JP Morgan my money. Why would I buy their stablecoin? And remember, kids, it's not stablecoins, it's crypto-backed or fiat-backed crypto instruments. That's the correct word. They're not stable.
Because, Janine, they're not just claiming that you can redeem their coin 1-to-1 for dollar. You can redeem their coin 1-to-1 for dollars. They're different.
Yeah, you know what I would like to redeem? I would like to redeem all of the money that they stole from people to get bailed out during the financial crisis. I would like to redeem that instead.
Whew, I'm with you on that. I mean, like, that's a pretty good segue into this next topic where, you know, maybe we can prevent all that sort of madness in the future. All right, so I've seen the meme, does Wyoming really exist, floating around Bitcoin Twitter since the first round of bills passed in Wyoming at the beginning of the year. I can't really verify that it does exist since I've never been there, but I hope it does because things are looking pretty good for Bitcoin and legalities in the United States over there. So another round.
I can vouch it exists. I've driven through it. There's nothing here.
That's right. Shinobi's driven through it. It's been verified. Wyoming does exist. Okay. So another round of bills passed in Wyoming that could bring more favorable regulations to blockchain related companies in the US. We covered the first 3 bills passed in episode 151, regulation on the range. And honestly, I probably took a harsh stance on the state for trying to regulate this industry and what that means for Bitcoin. But I'm starting to think about this a little differently now after watching a recent interview that Caitlin Long did with Naomi Brockwell. It was a great interview, and if you haven't seen that, I'd give it a view after the show today if you want to know a little bit more about the subject. But what I gathered here is Caitlin has been pushing these changes for a long time now. The Wyoming native has got 22 years experience in corporate finance, hails from Harvard Law School, and says she's been a Bitcoin evangelist since 2012. Caitlin got into all this because she noticed how bad the money transmitter laws were in Wyoming when she tried to donate to an endowment fund that helps female engineers. She ran into a bunch of legal red tape and found out how big the hurdles are for this industry when trying to mesh with traditional markets. So she set about making the changes to find a way around all the regulatory regimes in finance. These new bills are to help provide a solution around the bad practices currently running rampant on Wall Street and in New York. This is to make sure that mom and pops have a place to invest their money that won't get destroyed in these large over-leveraged positions that currently run the system. All right, so the major bill passed was SF 0125 that seeks to clarify property rights of digital assets. The bill summary reads, quote, classifying digital assets within existing laws, specifying that digital assets are property within the Uniform Commercial Code, authorizing security interest in digital assets, establishing an opt-in framework for banks to provide custodial services for digital asset property as custodians, specifying standards and procedures for custodial services under this act, clarifying the jurisdiction of Wyoming courts relating to digital assets, authorizing a supervision fee, making an appropriation, authorizing positions, specifying applicability, authorizing the promulgation of rules, and providing for an effective date, close quote. Now, that's a lot in the summary, but let's break it down a bit. This bill is about rehypothecation, and it says that if digital assets have value, they are considered personal property in Wyoming. That brings with it all the legal protections of personal property. The rules for those rights are negotiable if the assets are held through a security intermediary or broker-dealer. The bill also provides a roadmap to use these digital assets for collateral on a loan, crypto for fiat. Lending is a critical aspect for capital markets, and this should help pave the way for businesses to manage that aspect. The next bill creates the Special Purpose Depository Institution. The SPDI bill creates a state-chartered, non-lending, 100% reserve depository institution for businesses only. Bank is dollars only and can serve as the on-off ramp for blockchain companies to access the federal payment system. Since it's federal, companies will have to follow KYC AML rules and anti-terrorism laws. Since there is no lending in this bank, the revenue will be made from the fees. The last bill is authorized security token offerings in certificated blockchain shares, so STOs, basically. Those things are incoming. Federal taxes still apply on all capital gains. However, there are no crypto property taxes or sales tax in Wyoming. In Caitlin's Twitter thread and later in her interview, she discusses Operation Choke Point, where Eric Holder and unelected bureaucrats at the Department of Justice, the FDIC, and other agencies set out to kill legal businesses by starving them of access to financial institutions. Trump ended this program in August of 2017. However, 3 months ago, letters went out from 13 senators to the FDIC to say that these actions are still lingering. This has been the operation to crack down on industries they deem politically incorrect or high risk. Cannabis is not legal in Wyoming, so none of these bills really help tackle the cannabis crypto problem, but that's okay because we know myself and Bitcoin mom and family, along with the newly elected Governor Jared Polis, are going to make waves to try and change all that. It's legislation like this passed by Wyoming that will help bring guidance to other states like here in Colorado. I can verify that the Wyoming Blockchain Congress has been here in Colorado working to make sure that their sister states are staying up to speed with on the situation there. I mean, she said in her interview they're also talking to Utah as well. So these laws have already been taken up by 6 other states to serve as models to build around, and it's likely these bills will help boost Wyoming's standing in the world of finance and Bitcoin. This has been heavy lifting, and the local politicians really fought back against banks to favor their constituents looking for new businesses. So they really need to see an impact from this legislation to show this bill is growing Wyoming's economy. All of this still has to go through the Wyoming Banking Commission and get the governor's approval. However, all of that is expected to happen, and we'll see these bills become law. All right, so what did you guys think about this? 6 blockchain laws now on the books for Wyoming. You think they got all their bases covered to try and attract business to the area?
Yeah, I mean, like, a lot of people, such as Mr. Fallacy Monster here in the chat, love to go stupid government. Who do they think they are? Well, in this case, they're people who aren't morons. Like, this guarantees your property rights. This guarantees that you will have full legal protection in the state of Wyoming for any crypto assets you own, whether you have custody of them yourself or not. Like, that charter bank guarantees access to fiat side of things for businesses engaging in the space, and the full reserves make it a perfect thing to actually hold deposits for things like stable coins. And like, especially like clarifying a framework for collateral for loans. I mean, that is a huge thing. Like, that's operating capital for people who want to start businesses. That's people being able to access, the value they have in Bitcoin without necessarily parting with it or all of it at face value right now, to do things with what they have actually gained in value appreciation. Like, it's like they really are setting themselves up to be the Wall Street of the crypto ecosystem. Like, they're doing everything they can to ensure people's property rights are protected, that people have full access to the different kinds of financial services that you can build around Bitcoin and other systems in this space. And they're doing everything they can to ensure that that kind of attitude and legislation spreads itself through other states in the area. So, like, I mean, this is like, government is never perfect. It's always going to have its downsides, and it's always going to have that basis by which you can argue its illegitimacy. But in my opinion, this is an instance of it actually working how it's supposed to benefit and protect the property rights of the people who live under it. Like, that in my opinion is the only legitimate function of a government, to arbitrate conflict and to protect people's property rights. And right now it seems like Wyoming is doing a fucking damn good job of it.
Oh yeah, man. I mean, that's where, I've been looking at the situation differently after just rereading the whole thing and looking at it with a, fresh perspective. It's just sort of like, okay, yeah, there's a lot of these bad practices going around where, these banks are super over leveraged, and there's no real way to invest in the financial sector without going through these type of guys. And if you have a bank like this, like a special deposit, what are they calling it again? SPID. If you have one of these special depositories with 100% reserves, and like people actually own the property still, even if it's not necessarily in their custody, I think that's going to help provide some solutions for people that want to actually invest in certain areas of finance, but are worried about just the way that these banks run fast and loose with the numbers. So at least they know that all the accounting adds up on this. Did you have any comment on the way that these states are interacting with blockchain and Bitcoin, Janine?
Nope. I'm just glad that they're very much limiting the scope of what they're addressing, and they're not being stupid about the kind of legislation they're putting forward. But again, I am not a statist, so like, yes, the mini mafia has done a good job this time.
I know. I'm with you. I like and at first, if you go back to that other episode where we covered the regulation of the range, I had a different attitude about it, and I'm still, I don't know, still kind of conflicted a little bit, but I totally get where it's coming from. It's like these businesses need somewhere to do their banking, and like, I mean, I really didn't know about this whole Operation Choke Point and the way that Eric Holder and the Department of Justice were using the FDIC to lock out certain industries. And that was happening not just for cannabis, but for blockchain companies as well. And I mean, like, we do live in this free country where you're supposed to have free speech, and data is just speech. So it is one of those where, I mean, this is like, we should have these things already in place. So, I mean, it's good to see at least, somebody trying to make it to where these companies can just at least legally operate here within the United States. All right, so let's keep going into another bit of news that is kind of a repeat we keep hearing about, is a Bitcoin ETF news. These things will not go away. These are eventually going to make it past the SEC. Last we heard that CBOE and VanEck SolidX ETF was pulled during the government shutdown last month and then resubmitted a week later. Now we have some new players entering the ETF ring. On February 11th, the SEC announced it was beginning a review of an ETF rule change proposal from the New York Stock Exchange, Arca, and Bitwise Asset Management. The proposal was published in the Federal Register on February 15th, and that gives them a remaining 43 days to make their initial decision whether to approve, reject, or extend the deadline. The SEC has 240 days to make a final decision on the matter, but as we've seen in the past, these dates can get pushed back through refilings. And the New York Stock Exchange, Arca, filed for this ETF with Bitwise earlier this year during the government shutdown. So it wasn't accepted to the Federal Register at the time. Now it's in the register, and the clocks are starting to tick for the SEC's decision on the matter. At this point, we've seen lots of these proposals shot down, but SEC Commissioner Robert Jackson recently said, quote, "Eventually, I do think someone will satisfy the standards that we've laid out there. I hope so. Yes. And I think so." Close quote. Couldn't be a little bit more vague there, could you, Rob? I mean, it's a confusing topic because all of this feels like, we're just trying to formulate the key to unlock this ETF, and that all just is dependent upon the right social network and people involved to allow the right people to get paid. It's downright confusing, and we are even getting some conflicting reports on this story already. While the CoinDesk article in the show notes mentions that these filings appeared in the Federal Register on February 15th, at the bottom of the article it says it has yet to appear in the Federal Register. I checked through the SEC's filings for the company and couldn't find one registered on the February 15th date. It could be a glitch in the system, but at this point it's still hard to tell. Let's just say for now, these filings were made during the government shutdown, and they're expected to be listed with the February 15th date. That's about as good as we got right now with the information that we've been given. But so there's another ETF filed, and eventually one of these things are going to get through. What do you think about Bitwise and Arca?
It's just another ETF. I mean, Bitwise, it's pretty much just another investment firm like Grayscale. And I mean, it's like, I'm honestly sick of this ETF back and forth. At this point, I am of half a mind to just have a smart ass counter along with the block height or something and just ignore it until something actually happens.
I know, man. It's it really is like a ping pong game trying to figure out if this thing's actually going to go through.
I think Chairman has it right. It will eventually. At this point, I'm honestly sick of obsessing when eventually is going to be.
Yeah, honestly, yeah, that back and forth is just like, ugh, it's enough to make you feel like you're in a, one of those old school circus rides that makes you all sick and you're about to puke. So let's just keep moving through. Did you have any comment on this ETF proposal, Janine?
No, I don't like ETFs. They can all go and die.
All right. So let's get into the next couple of bits talking about regulations in countries and the way that they're going to deal with all this madness. Indonesia. Regulators in Indonesia have recognized Bitcoin and other cryptocurrencies as commodities. The Indonesian Trade Ministry Futures Exchange Supervisory Board, the BAPIPTA. I'm sorry. I was like, before the show, I was like, I better learn to pronounce this because I don't know. It's called the BAPIPTA. Issued regulation number 5/2019, which states cryptocurrencies are commodities and also includes regulation for exchanges. Now exchanges must do their due diligence and keep records for a minimum of 5 years, keep one of their servers in the country. They need to have clearly defined organizational structures with departments like legal, auditing, IT, and client support. And this supervisory board chief, Indrisi Winsnu Wardhana, said about these regulations, quote, "We want to give protection to people who want to invest in crypto assets so that they aren't cheated by fraudulent sellers," close quote. And these new regulations are part of a larger set of rules for cryptocurrency commodity trading in both the spot and futures markets there in Indonesia. While these rules have brought some clarity to the situation, it still has a way to go to bring Bitcoin and others to the masses in Indonesia. Article 8, paragraph 1 of the regulation stipulates that crypto futures brokerage firms require a minimum paid-up capital of 1 trillion rupiah, or $71 million, or almost 71.7 million. Also, Article 24, Paragraph 3 of the same set of regulations require Bitcoin futures traders to hold a minimum of 100 billion rupiah, 7.17 million, out of which the law mandates a minimum deposit of 80 billion rupiah, which is 5.73 million. Stakeholders in the $5.73 million. Sorry. So, stakeholders in the industry say the transferred capital requirements far exceed those stipulated for futures trading in mainstream asset classes. Another point to remember in this story is that despite all these new regulations, it doesn't negate the ban for cryptocurrencies as a means of payment. Ani Wajarko, a top executive of Indonesia's apex bank, BI, said, quote, "BI still prohibits Bitcoin or crypto as a means of payment. Commodities regulation is not an area of concern for the BI," close quote. So it looks like Indonesia is taking small steps to keep those gates tight as to who's allowed to play in their crypto economic system over there. But I mean, this does bring at least a little bit more clarity on whether or not Bitcoin is a commodity or a security or a currency, and how exactly that's going to be labeled. But it definitely looks like they got a ways to go.
I mean, I think at this point is just like a standard strategy for countries who are excessively nervous about Bitcoin or other cryptos disrupting their national currency. And I mean, I guess this is in a way still a step forward, although not a very big one. But it does kind of have me, wondering when you were discussing a ban on use for payments. Like what is the exact definition of a payment? Like what differentiates a payment from barter? Like at what point is like me giving somebody Bitcoin for something else a payment with currency as opposed to just me bartering with somebody one commodity to another?
You got me, man. I'm sure that you got them too, where they're probably also shrugging their shoulders.
I think there is an argument to be made there, but whether or not it would be successful is a wholly different matter.
Yeah, I mean, you know, there's a lot of this legalese everybody's got to clear up in all these different regions and countries, and so this is just one step over there for Indonesia. But let's continue on talking about Venezuela. And, you know, we've been covering Venezuela and its continued downward spiral through hyperinflation, which is forecast to reach some 10 million% this year. It's no surprise to us to see that they've once again reached new all-time highs in Bitcoin trading volume. The volume went up 30% to 2,454 Bitcoins, or around $9 million per week, which 9 million might not sound like much in volume comparatively, but that will provide a lot of goods and services for people in dire straits down there. It's been reaching these new all-time highs on a regular basis in the country, and I wouldn't expect it to slow down anytime soon. Maduro's Petro has been nothing short of a disaster since he announced it, and the Bolivar, you're not really in much of a better position. So for the foreseeable future, these trading volumes are probably going to keep getting higher until they peak at a level of current economic output. It's terrible to have to keep focusing on stories like this one, but at least in today's world, these people have Bitcoin to fall back on.
Yeah, I mean, I fully expect this kind of trend to really keep going forward. I mean, like, they're pushing the petro everywhere they can. Like, they're trying to clamp down with regulations and limitations on remittances through public cryptocurrencies. I mean, you know, like, people in this space have said for years, when the government says something is bad, that generally means that it's good and you should get your hands on some of it. And it seems like some portion of the population of Venezuela has taken that to heart.
You know, it's really a terrible thing down there, but I mean, like we're saying, at least there's Bitcoin there, and maybe these people that are figured it out are spreading the word, and you know, maybe we'll actually see someone come to rise through that aligned incentive structure of those people just trying to, you know, save their economy, and we'll actually see somebody come up with you know, a good percentage of the population supports them. But you know, it's still so hard to tell right now through misinformation and, you know, strict, you know, practices that sort of say you have to use the petro for this or the bolivar for that, and you know, this is illegal. So it's hard to, you know, say when it's going to, how far it's going to be before things get good enough to where they can actually sort of stand up on their own feet there. So it's kind of a sad story, but like you're saying, at least there's Bitcoin at this point. So that's like all our legalese stuff and everything. You want to take us through some cool little tech upgrades?
No.
No.
Just
Man,
fucking
this thing's
Bitcoin,
cool.
punk, fucking figure it out yourself.
All right.
Alrighty. So, Rodolfo Novak of CoinKite made a tweet the other day looking at something that Peter Gray, the other founder of CoinKite, hacked together. It's pretty interesting. So pretty much what they did was take an M5 stack, which is a little prototypable board for Internet of Things applications. It's pretty much just a little integrated microcontroller and system with a small screen, some buttons, a number of ports and pins for programming. Pretty much this is the kind of thing you hack together prototypes for your smart doorbell or smart thermostat and shit like that. But what they've done is turn this into a little mobile battery-powered Opendime verifier. So something that you can actually hard code the CoinKite keys to validate the authenticity of an Opendime and do so mobily. Now, obviously, this isn't going to be something right now that you can check balances on. You're going to need an internet connection and access to a copy of the blockchain to do that. But a huge part of the, I guess you could say, risk of an Opendime is that if you don't actually validate the firmware and the chip signed by the CoinKite factory key, then you're not really certain that it's a genuine Opendime. And if it's not a genuine Opendime, it could be fraudulent. It could have been manufactured in a modified way to allow the keys to be duplicated, money to be stolen, so on and so forth. So hacking one of these little things together allows you to deal with the biggest security risk of the Opendime, whether it's legitimate or not, anywhere you go with a little device in your pocket. So the M5 stack, you can get some, I think the most basic model for like $40 on Amazon, but you're also going to need a USB shield that works with the 30-pin brain fart debug port. It's the same kind of pin connectors on a Raspberry Pi to connect to it so that you can actually plug in the Opendime, because the standard device itself only has a USB-C port. So it's $40 for the device. I'm not really sure how much a USB shield compatible with this would be, but they're generally not more than like $20 or so. So $60. And then there is a GitHub repo hosted by Opendime with all the code necessary to get this operational and running. And in the future, they're going to be working on a Wi-Fi connection feature so that you can check balance, as well as QR code support and a transaction broadcaster compatible with the cold card wallet. And so, hopefully, I'm definitely going to be bugging Rodolfo about this. That thing better be able to hook into that Blockstream API endpoint. But for right now, this is pretty much a DIY project with the source code and the devices you can get on Amazon or anywhere else that sells, prototype boards like this. You can hack one together. Or, as Rodolfo is teasing, soon TM, they might be available for purchase through CoinKite, but I wouldn't really hold my breath if you're eager to play with this. They tend to actually take their time and do things right, so I wouldn't expect this to pop up in the next month or so. But hey, this is Bitcoin. You can DIY it yourself. So yeah, it's a pretty neat little gizmo that is a whole toolkit for doing things in meat space with peer-to-peer meat space transaction.
Yeah, man, when I saw it on Twitter, I was thinking just like how cool it is, like just the idea of like in the future at some point in time, you can see somebody maybe having one of these next to them to just sort of verify somebody's got an amount needed for a given good or for access to something. I mean, like a concert or something. I don't know. I mean, like it just jumps to mind all the different possibilities. And I mean, Opendime did that a long time ago, and Rodolfo and what they're doing with the cold card and over there with that company, it's just incredible stuff. So, keep it up, guys. I'm going to be patiently waiting to get my hands on one.
Ding, 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 ding. Okay, what do I have to rant about next? Okay, this thing. Alrighty then. So next up, there is a project being thrown around all over the place on Twitter. And I do have to say that, in all honesty, I am not really that fond of this. It's a Lightning project called Tippin' Me. And pretty much the whole gist of the project is a custodial Lightning service that you can link up with your Twitter account so that they receive Lightning payments on your behalf and hold them custodially until you cash them out. And they have recently released a Chrome and Firefox plugin that pretty much adds a tip in me button over Twitter for every Twitter user. And so honestly, like, let me try and break this all down in order so I'm not just reading about this thing. But first off, the core of the Tip and Me project, it is a custodial service. So until you withdraw, which they can stop you from doing, they have complete control over all of your funds. Second, tying it to your Twitter account is a huge privacy leak. And while I will give that this is a project by one person running this independently, I do have to call back to ChangeTip, which was a completely centralized off-chain tipping service for things like Reddit and Twitter that went out of business years ago. And really the only way that they could make any money was really data mining. And you know, that's pretty much anybody using this service is putting all of their transactional data, using it in the hands of a single person, a central service that correlates every payment to an online identity, which in a lot of people's cases is their actual legal identity. And that's a way to make money. And yeah, this person might not intend to do that, might not have any interest in this, but over Lightning Network, trying to shave off payment fees for Lightning Network sized tips, that's not going to make any money. That won't even cover the server costs to run a Lightning node unless this explodes in size. And the bigger it gets, the more his operating costs are going to get, having to manage and maintain payments and tracking each individual user's account balance. So like this does not really make any kind of economic sense unless you look at the monetizable value of all of the information that he can collect on everybody using this. And, you know, it's like, I don't really in itself have problem with custodial services. What my problem is with most of them in this space is that they don't engineer themselves or architect themselves to maintain privacy and control as much as they possibly can. And, you know, with big businesses like exchanges, they don't really have a choice because they have regulations and governments breathing down their necks. But small projects like this, things that don't interact with fiat like this, they absolutely have a choice. They absolutely have the ability to start from scratch with an architecture that is designed to, as much as possible, maintain the highest degree of independent control over their funds that they can possibly give a user based on being a custodial service, and that maintains as much user privacy as is humanly possible, given that they're a custodial service. And none of them are doing this. None of them. They're just hacking things together with no thoughts in terms of the architecture, in preserving as much of those core properties of Bitcoin as possible for their users. And that's the issue I have with these types of things. It's not just being custodial, because there are many things you can do that are custodial in nature that maintain a high degree of control and a very high degree of privacy, but nobody's doing it. Like, people are just taking the easy route and not actually putting in the hard work to build what Bitcoin makes possible, even if the user isn't holding their own keys. And lastly, the one big problem I have with this is the way that this new extension for Chrome and Firefox works, putting a tip in me button in every tweet. This is exactly the same kind of shit that the Brave browser was doing with their BAT token. This is set up so that a user who has not verified an account can be sent money over Lightning Network that is not accessible without registering an account. And like, it's like, are you fucking kidding me? Are you serious? Like, and this is like just the lack of ethics involved in engineering something so that I can send money for you to some place that's going to hold it and require you to damage your privacy to go collect that money from me. Like, it's astounding. It is absolutely astounding that people are still building things like this. Like, it's, you can do better than this. You can be more ethical than this. You can be more secure. You can be more private. But nobody is actually fucking building things that way. And it's really kind of fucking sad, given all that Bitcoin allows you to actually construct on top of it. It really is.
Yeah, man, I know that's kind of one of the problems, I suppose, with Lightning Network being built out so much and so fast, and everybody's kind of just grabbing something and hacking something together and running with it without really looking into the history of the way some of these things have been tried in the past and some of the ways that there's, yeah, I mean, you know, you don't want to give up users' privacy, and that's one of the major benefits of Bitcoin. And I mean, if you're just getting people to go in and dox themselves in order to receive very small fractions of donations through Lightning Network, I mean, we're just not there yet. And I really like the attitude of like, hey, you know, let's build stuff, you know, and like, hey, let's put a lightning bolt in the tweets so that people could get, you know, tipped for their tweets and discussion. And I mean, I know that Jack Dorsey from Twitter's talked about enabling that sort of thing in the future, but it's not going to be done this way. I mean, this is something that goes against the way Bitcoin is being built out. And, you know, that's where we just have to be extra precautious about some of these things that are coming out with the Lightning Network, that they're still maintaining a structure that keeps people's funds safe and their privacy safe. And we're trying to build these things out tenably to where people can, you know, they can still access the network with these small payments. And, you know, it's still just like you're on the Bitcoin network, where right now there's still a lot of, you know, well, is this custodial, is non-custodial, and the back and forth that brings in the discussion. And I mean, we're starting to sort of find our little bit of weak points here in the development of this network. And I mean, it's a good thing that we're seeing it, and it's a good thing to hear, you know, you sort of point out some problems there, and hopefully, you know, these things can be corrected and people will start building out solutions that are done right.
You know, the way things are going, I'm getting less and less optimistic about that. The way people are just hacking things together, just to hack things together. Like, they're not thinking through the consequences of things. They're not thinking through, like, how damaging what they're building is to users' privacy. Like, it's just, it's honestly like pissing me off about the Lightning Network in general at this point. It's that, like, people are just building shit like this just to go, I built something on the Lightning Network. And they don't really seem to give a shit about all of the huge compromises that they're making to do so. And it's like, it really, to me, like, not to be a dick to people actually building things, it just seems like people going, look at me, and not actually trying to build to the core philosophy of what Bitcoin is all about.
Yeah, I mean, that could be it. And also, I mean, like, I think it could also just be like, you know, the Lightning Network is something that we've been talking about for a long time, and it's finally mainnet and people want to build stuff on it. And, you know, I know people that learned Bitcoin because they're developing on Lightning. And luckily they did take that step to learn Bitcoin in order to start working on Lightning. I think we're just getting a lot of guys that do want to build on Lightning without thinking about how Bitcoin is built first. And so, yeah, I think we should just keep pointing people to look at the way that Bitcoin's built out and what it provides the user, and then try to build out from there with the Lightning Network.
I would rather see people building Xiaomi and eCash servers than half the shit being built on Lightning Network right now. Like, honestly, they're more private. They're more honest about like the trust model in terms of the custodianship involved. It's like what if you're going to move in this direction, go all the way and don't half-ass it. Build something that's actually censorship resistant and private while being custodial and centralized.
Right. There's a lot to build out, man. I mean, we got the Lightning Network. We also got, these side chains, like these federated side chains with Liquid. And I mean, definitely the Xiaomi and eCash server. That's a great idea too that I wish more people would look at. But it's one of those things where a lot of people, they come in and they say, oh, this is decentralized, this is centralized. I want to work on this or work on that. A lot of it just needs to, whenever people are coming in, they need to start from zero and learn about it on the way up, instead of trying to just say like, okay, this is where we're at, let's build out from here, without understanding like why we got to where we're at. Janine, did you have some comments on these Lightning tools like Tip.me?
Yeah, I think, everyone's so excited to be working on Lightning, and they think, oh, we need to make it easier for new people to use it without having to run a node and such. And there's been a long discussion today that I saw on Twitter about the difference between like you can have a light wallet that is not necessarily a custodial wallet, even though obviously a custodial wallet is a light wallet. Obviously the most extreme version of a light wallet. And so I think a lot of this is just because people are being a bit too impatient about the fact that, there aren't as many wallet options to use where you're not running your own node at the same time. But I definitely do not want to move into a custodial model. And so I think we should be more patient and wait until we get some more options that are trustless, or at least you're not, basically giving your keys over to someone else, relying on a third party, because that's not something I want to do with Bitcoin, and it's definitely not something I want to do with Lightning. I mean, I guess some people would make the bargain that because it's a smaller amount of money, it's okay, but I would prefer that we try to avoid that as much as possible and not start going down that road just because it's early in the development and some people are frustrated about the usability and stuff like that.
Like, I'm fine with custodial things, but like, if you're going to do that, do it right. Like this kind of thing, like Tip.me, it destroys user privacy, and things can be censored selectively. Like, if you're going to build a Xiaomi and eCash server, you can't censor things selectively with it. You either process all payments or you shut it down and you process nothing. It's private. You don't know who's paying who. So users' privacy is maintained. Like, if you're going to do something that involves custody, do it right and actually preserve those two core properties of Bitcoin: the inability to be selectively censored and the maintaining of your privacy. Otherwise, like, if you're not going to try and do that, then you're just rebuilding the same shit we're trying to get away from with Bitcoin in the first place.
Yeah, a lot of people building a lot of different things out there, and we just gotta make sure that we're building them out right, because we certainly don't want to build in some sort of bad practice and then it just kind of become the norm, because that would be detrimental. What else is going on in Lightning that sounds a little interesting, Janine?
Well, in the last episode of the show, I covered a survey in the Ethereum space titled State of dApps Ecosystem Technology and Adoption 2019, which highlighted that most dApps are not really decentralized at all. And one of the other results from that survey was about the use case for most dApps being at least or almost a third of them were about gaming. And well, that's not unexpected because most early stage technology is usually tested through gameplay, like fun stuff, not serious financial transactions. And the Lightning Network is no exception to that. And we covered quite a number of Lightning games in the past, including the infamous graffiti board at Satoshi's Place in episode 106. I believe it was titled Cypherpunks Draw Cocks or something like that. And recently there was also Lightning Chest from Koala Studios. I believe he also made Satoshi's Place as well. So there have been a number of games already, but the day before Valentine's Day, Satoshi's Games launched on mainnet at studio.satoshis.games, where you can then navigate to the virtual arcade at satoshis.games. The intro text on the arcade says that Satoshi's Games is a game and platform powered by the Lightning Network, inspired by Satoshi's Place, which was the graffiti board I mentioned. They also say some games are free to play without having an account. Premium games require an account to play. And in order to open an account, that currently costs about 1,000 Satoshis, which is a whopping 3 cents in USD at the moment. So some of the games in the free section of the arcade, there are the following games. There's Legend of Satoshi, which is a text-based adventure game about the creation and history of Bitcoin. There is Bcraft, where you can travel to the bee crafting world of a fiat island full of zombies who want to steal your Satoshis. There is Low Mem Sky, an outer space exploration and survival game. Skull Dude, and a dungeon shooter game. The Lair, which is a sword fighting game fighting a villain named the Dark Lord, who has been terrorizing the northern coast of the Moonlit Empire. And then in the paid section of the arcade, there is Grid, which is a puzzle game that looks... I've never played Candy Crush, but it looks similar to Candy Crush to me. Flappy Crypto, where you help a little green bird go through an obstacle course of literal hard forks that are dangerous, and also avoiding attacks from Warren Buffett and Zuckerberg. There is also Super Bro, which is another obstacle course game styled after Super Mario, where you need to save Satoshi instead of a princess. And my favorite of all is probably the simplest of the games available in the arcade currently, but it has the funniest storyline, called Lightning Agar, where the objective is the following: try to get fat and eat other players without letting them eat you. So that's pretty great. You have to eat other people. Keep in mind that the activity on Satoshi's Place, it was important, even though it was like very lighthearted. Obviously, there was a lot of shenanigans going on with various things and people that were being drawn. But that did, in the end, help Lightning developers in terms of finding issues and stress testing software. So even if you're not a developer who can write code or conduct code review, you can still contribute to Lightning development in that small way when you're playing these games, by documenting any weirdness you come across and also have some fun at the same time.
Yeah, I imagine you're going to run into a little bit of weirdness whenever you're playing games on the Lightning Network. I mean, I think this is pretty cool, but for sure you might run into some technical things here or there you might have to work out. I thought it was pretty interesting just looking into it and the way that they sort of set up that Super Mario world, where it was like you could buy lives, but if you buy a life, it resets your level. You have 70 seconds to complete a level. Like if you could buy a multiplier to multiply the Satoshis you gather, it kind of became like this interesting math equation of like, okay, if I could figure out how to speed run these levels with the most amount of coins on the level, then I could possibly make my money back. So it's like a little bit of some, you're putting money to play and possibly earn some money. So there's a little bit of like some gambling maybe involved there. I don't know. Like that's the way you'd say it. It's just like paid access to the game though. And like you could get paid for helping develop the this whole Satoshi's games. I think it's a pretty interesting idea. I really like it.
Mm-hmm. I'm really interested in this for like two reasons. Like one, I'm not really that confident that this pay to play model is going to be really popular with gamers beyond like people who just get addicted to smartphone games constantly, just because like really over the last few years, like most like real gamers have been losing their shit. Like as far as like that pay to play model creeping more and more into mainstream video games. So I'm kind of interested to see how it goes on that front. And I'm also kind of interested because me and Janine actually met the guy Carlos who started this at the hackathon in Berlin. And one of the things that I was most interested in that he was talking about was game tournaments. So like the ability to set up like a tiered tournament, like like StarCraft professional tourneys and stuff in South Korea, where people pay to enter, and you kind of have like part of what the players are paying as an entry fee kind of form a pot for the people who end up winning it. And that's something I think that could very much take off and get really huge, because it is not quite like the pay to play model that a lot of gamers are getting pissed off. That's like, or pissed off about. That's kind of making like a monetary incentive dynamic present in competitive gaming, which is something that's been exploding in popularity for like the last 5 years or so.
Yeah, I mean, games are always popular. Lightning is popular. That's a pretty good combo.
Mm-hmm.
All right, I guess I can take us into the Conbase madness, man. If we're good on comments there. So Conbase, yeah, Coinbase. So it looks like Coinbase has sent out an email to their customers informing them that their Shift debit card will be shut down, saying, quote, "We hope you enjoyed using the Shift card and truly thank you for your loyalty. We, unfortunately, will be retiring the program in April of this year. All Shift cards will be officially deactivated on April 11th, 2019. Don't worry, your Shift card will continue to work until that date. Feel free to email support if you have any questions, and we'd be happy to answer. We hope to relaunch the program and issue new cards in the near future. Thank you for your patience. Sincerely, the Shift team." Close quote. And this really is, I don't know, this stinks, man. It's for people who really are reliant on that card. And to be perfectly honest, that's me sometimes. I mean, I haven't used the Coinbase in a long time, but when times were tight in the past, I would spend a little Bitcoin. I would send a little Bitcoin to my Coinbase account and spend it on my Shift card in order to make it through the week or month, depending on the situation. And this card was also one of the main reasons I signed up for Coinbase back whenever they introduced them in late 2015. Back then, as someone who didn't have any savings, the initial investment of a Trezor and a Shift card allowed me to accrue enough savings to actually make things better in my life. And this isn't the case for just me. And I'm sure a lot of Coinbase users are going to be, pretty upset with this and wondering why they still got an account with them after April 11th, if this all continues on the way it's supposed to. And we posted a Reddit thread in the show notes where people have speculated that this is a result of either the business model not being profitable or, possibly Visa asking them to shut that service down. I think when it comes to the question of profitability, that would have to do more with the way Coinbase does its marketing on the product itself. And I think they've been working very hard at trying to steer anyone away from the idea of Bitcoin actually being useful here in the recent 3 years, 2-3 years. So, yeah, with the second one, it seems unlikely. Yeah, they have that, like that Visa shut them down because we haven't heard anything from the Cash Card yet, and who also uses Visa. And yeah, I mean, speaking of the Cash Card, and Jack Dorsey and everything he's been doing with the Lightning Network, we need to start a deposit BTC Cash Card meme for Jack, because this is a vital part of the system for the Bitcoiners who use their Bitcoin sparingly whenever they need it. And so, yeah, I checked my inbox this morning and didn't notice any emails from Coinbase about this subject, but I think you got one, Shinobi, correct?
Yep. And come April 11th, if Square Cash has not enabled Bitcoin deposits yet. I am going to be in a bit of a tight spot. So, yeah, you know, I think the most likely explanation is probably the most predominant attitude in that Reddit thread, that they just weren't making enough money to make it worth this. Like, they don't really charge fees specifically for using the card, and at least circumstantially, I've always got the feeling that they didn't have that large of a user base, because when I've had to contact support, it was like that. I got a response back almost immediately. But yeah, this is going to be a pretty big issue for me after April if I can't find an alternative.
Jack, enable Bitcoin deposits on the Cash App, man. We need you. Like, I understand your spot, man, and I think a good bit of people are with you, man. So this was kind of like, I know that you're saying that they don't have a large user base, but the people that were using that, it was pretty important in the way that they were managing their finances. I mean, I could attest to that myself. So going into the next Conbase craziness. So Conbase has got a con. Some people on a regular basis as their new business model to build out their envisioned future. And now a little while back, they offered an airdrop amount of Zcash to everyone who had an account at Coinbase in Venezuela, which is good that they're offering to help people in a dire situation, but it's also marketing to the weak who have no other option. And well, now you can earn $3 in Zcash by taking their small crash course in the network, on the network. I guess this is how they are using their earn.com acquisition. And so I took the little course to check what insights they are offering. And, it's a doozy. So, like, it starts off with, quote unquote, Zcash is a cryptocurrency with strong privacy features. Learn about how it works and you'll earn Zcash. And there's 3 video lessons lasting about 3 minutes apiece. And, at the end of that, you're supposed to get $3, but I just was watching it so I could inform all you guys. And yeah, we can go from there. So the first video, it's a cryptocurrency created by, this is discussing Zcash from the video. It's a cryptocurrency created by cryptography experts who loved Bitcoin but wanted to make the transactions more private. They took the open source code and improved it. And Zcash has strong privacy features. Bitcoin transactions are mostly public. They lack fundamental privacy. That's why Zcash was created. They go on to mention the transparent and shielded addresses, saying that shielded hides the amounts sent, which makes Zcash so powerful. And yeah, you guys know better. This new hidden inflation bug recently discovered actually makes those amounts from the shielded transactions transparent if they're sending from the old pool of shieldeds to the new ones through their turnstile mechanic. So all of this is on the stipulation that you follow the network in their upgrades to keep your privacy, but all of this goes out the window because you're doing all this through a KYC AML exchange. Okay, on to the second video. So ways to make a purchase with different approaches to privacy. It goes into cash. The use case of cash is for privacy, and there's no digital way to transmit cash with privacy. They bring up Bitcoin as a way to solve this, but once again go into the details of it being a public blockchain, and they go on to say how anyone can go and look up this information and know all about your transaction history. And that's when they make one of the most egregious comparisons that I've seen made for these two networks, and saw it kind of splattered on Twitter for a little bit, where they called Bitcoin HTTP and Zcash HTTPS. Right. All right. Down to the third video before I puke. Goes into transparent and shielded transactions again. They mention how charities might want to use transparent addresses while individuals might not want to, and this is all brought to us by the cryptographic breakthrough called the zero knowledge proof. And they make Zcash's vision of a decentralized global currency a reality for everybody. That's like a quote from what they said. They said, like, yeah, Zcash's vision of a decentralized global currency a reality for everybody. All right. Yeah. So it's crazy to me how they keep telling people to learn about this technology, but they know it's filled with lots of technical jargon without getting into any of that. What do you learn from Zoku and team? Who's going to tell you which pools of liquidity will keep you private? Zoku and team. Are Zoku and Brian Armstrong going to keep your identity private if the FBI, DOJ, IRS, CIA, NSA, or any other agency comes a knocking? You better hope so, because that's an easy choke point. This is where I get real upset from Zcash and Coinbase. Not only do they not educate you about real privacy and what all that entails, but they keep pushing you to trust these systems that are managed by a few individuals. Zoku mentioned on a live Periscope yesterday from ETH Denver that the transparent shielded addresses percentages of 95 to 5% should flip after they bootstrap the network onto enough third-party platforms. So once they swap, I mean, and they go back, like they're saying that it's 95% transparent, 5% shielded, that's going to flip to where it'll be 95% shielded and 5% transparent whenever they're on enough networks. And I mean, that hidden inflation bug, I mean, who's to say that they didn't take advantage of it? All right, all right. I'm not saying Zoku and the team did that, but it's very obvious from our recent story where we covered the two major hacker groups who can handle all these exchange hacks. There's one who's very disciplined and do these hacks for reasons outside of potential profits, and like to just show how weak a potential adversary is. And you know, it's hard to look at this and say that there's anything out of this other than Coinbase trying to make use of their earn.com acquisition that cost them a good bit of money, and now trying to just keep pushing Zcash on everyone by telling them that it's more private, even though they don't actually get into any technical specifics of what privacy is or how your privacy has been compromised before you even enter the network. Or there's just got so much more education to do. And this is just a sick, really it's a sick, poor attempt to try and educate people about what Bitcoin is and what Zcash is. And yeah, it's just another one of those things where when I'm looking at it, it's like these guys, they're making all the wrong decisions. And yeah, it's upsetting. Did you guys even take a look at this terrible thing? I didn't even look at it till I had to. So did y'all guys have any comment on, you know, what Coinbase is trying to teach you about zero knowledge proofs and Zoku and company?
I think it's hilarious that they're framing this as cryptographic experts that fucked up the main part of like the trusted setup, like guaranteeing privacy and lack of inflation. And like seriously, like this is so new that to say that it's airtight to be pushing it like this is just absurd. Like zero knowledge proofs have never been deployed at this scale for this kind of sensitive thing. To just be 100% confident that it's airtight when you've already seen they fucked it up once is absurd. And especially like the comments Zoku keeps making about like private enough for the individual but not private enough for criminals, like it's nonsense. And then like how could you trust somebody with that? And like, you know, he's talking about the percentages flipping on shielded addresses versus unshielded. If I had Zcash, there's no way in fuck I would put my money in a shielded address after an inflation bug was already found. I don't trust you. I don't trust it. Why am I going to risk my money getting deleted when the next one is found? When I can just not do that.
Yeah, I mean that's a good question. I mean, honestly, yeah, I got a few questions for him. Like, has he looked into, you know, these Shamian coin eCash server coin joins? Like, has he looked at Wasabi Wallet? Has he looked at what Bitcoin is trying to do? Because if this guy loved Bitcoin, and I know that he said that, and he said like, oh, I love Bitcoin, but it broke my heart, dude. You never even found out what Bitcoin was doing. I don't think. I think you need to look at Bitcoin again, and because there is an ability to stay private there. And it's just you have to be technically competent enough to do it. And what you're doing is just decreasing that anonymity set within Bitcoin. I mean, like the way I see it is it's kind of like the brain drain of developers to Ethereum. It's like the liquidity drain from coin joins to Zcash. I mean, I really think there's not that many people out there that are actually doing that, but it is probably some people that are, you know, they could have looked at something like Wasabi, but instead got sidetracked by something like Zcash. It just kind of chokes me up a little bit because the whole, oh, we're being private. And we know that that's just not the case. Do you have any comment on this one, Janine?
Nope, just hate Coinbase.
I'm with you, kind of choking on my own rage here. All right. So the last little bit, just a little bit. So Conbase and SV. All right. So the last little bit from Conbase is that users now have access to their SV coins from the BCH ABC SV split. So if you had some BCH in Coinbase at the time of the split, you now have access to both sides. But they're not planning on offering any sort of trading for BSV on Coinbase. So if you're an SV fan, go pick it up and take it wherever you want. You might want to just get it out of there because you know those guys aren't your friends. So yeah, that's the 3 bits from Conbase today.
Wow, you mean I can take my whole 30 cents and remove it from Coinbase? Golly gee. I can buy a stick of bubble gum, Batman.
Yeah, not much else other than that. Yeah, I haven't looked at it. I remember whenever the BCH showed up in my account, I think it was like a couple bucks or something because at that point I'd already exited Coinbase for the most part, and somehow I showed up. So yeah, probably a few cents sitting in some account somewhere. And yeah, if you got the urge to grab those SV coins, go grab them.
Well, nah, they can keep them.
All right, so what is next on the agenda here? Talking about Faketoshi? Oh no, what did he do?
Yeah, so we were actually thinking not to talk about this at all because this guy just feeds off of attention, whether it's positive or negative. So I'm going to try to not say his name. I'm just going to call him Faketoshi. So of all people, Faketoshi decided to respond to the CFTC's request for input on crypto asset mechanics and markets submitted on February 15th. He writes, "My name is Scratch Faketoshi, and under the pseudonym of Satoshi Nakamoto, I completed a project I started in 1997 that was filed with the Australian government in part under an Australian industry project registered with the Department of Innovation as BlackNet." Now, if you have been paying any attention to the latest diarrhea from Faketoshi, BlackNet is a project that he has lately been claiming to have worked on for the past 2 decades, starting sometime in 2001. On February 10th, just a week ago, he tweeted an abstract of that research paper for BlackNet and claimed that he submitted this to the Australian government in 2001, which would be several years before the release of the Bitcoin white paper in 2008. And he claims that BlackNet was a precursor to Bitcoin because clearly in the research paper, it looks like he basically copy and pasted the Bitcoin white paper abstract. However, he has yet again made a fatal mistake in trying to bamboozle the lowest common denominator idiot in the universe and seems to have forgotten that Satoshi actually shared an earlier draft of the Bitcoin white paper in August 2008. And there are several minor yet noticeable differences in grammar changes between that draft and the final draft that was published in October. For example, in the earlier draft of the white paper, the abstract begins as a purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without the burdens of going through a financial institution. The part about burdens was not in the final draft of the white paper. That was also not present in the BlackNet paper. Weird. It seems he skipped a draft. Strangely, even though his BlackNet abstract supposedly existed several years earlier, it contains the same edits that the final paper or the final draft of the white paper had instead of the draft white paper that was shared 2 months prior to the real one. Oopsie. Now, if you want to torture yourself, feel free to read the entirety of his comments. I'm not going to really go into it because it's mostly boring and he's a terrible writer. And it's the focus of it is mostly about Ethereum and ICOs being illegitimate and Ethereum is poorly designed, etc. At one point, Patent Troll even says the only way that Ethereum can scale is reliant on altering the model to copy Bitcoin. I have patented most of these techniques. That's great. Faketoshi, nobody cares. He also says there is no such thing as a validating node, nor for the concept of democratized decentralization. The myth of decentralization has been spread with the sole concept of enabling illegal markets to exist, end quote. So this is related to the fact that Faketoshi is very, very angry about the fact that Bitcoin has been perverted in some way by the Bitcoin core group, as he calls it. And it was not designed to be anonymous. He said in a recent Medium post, anonymity is a curse. Nothing good comes of it. And yet, you know, supposedly his anonymity was valuable, but no one else deserves it. Typical. And so he's very angry about that's been perverted and that, you know, we're trying to make Bitcoin more anonymous and private. Because, I mean, it's not like Satoshi had a full section in the white paper titled Privacy that was dedicated to even recommending that new keys be generated for each transaction to remove the possibility of linking multiple transactions to the same owner, which he saw as a risk. But what do I know? That's what the white paper says. Maybe the earlier draft of BlackNet is the true vision of Satoshi. I really only have one comment in general to his, or one response to his comment, which is that for a supposedly rich guy, you'd think that he'd at least pay someone to, I don't know, proofread his comments that he's making to a regulatory agency so that his formatting doesn't have extra numbers that have nothing in them and basic grammar errors and inconsistent capitalization of things like Bitcoin and blockchain and all that. Just like most of his writing, like you'd think he could afford a copywriter or someone to check, but apparently not. He's too busy hanging out on yachts and tweeting about all of the people he's going to destroy and all of the bugs he's going to reveal that never end up coming to anything. So I guess we're going to have to hear more about this for the next couple of months because he clearly hasn't run out of his money from Daddy Calvin yet.
Mm-hmm. And I think, like, honestly, I'm kind of anxious to see how the CFTC reacts to this because I think, like, the way he wrote this was well crafted in terms of fooling people like that. Like, for instance, the bulk of the first half of his comments were pretty much, I mean, I hate to say it, but it's true. Like the way that Bitcoin functions essentially as a clearinghouse for transfers of assets and can't really take on the functionality of like actual order matching and establishing those transfers. Like it's true. Like that's how Bitcoin functions, realistically speaking. But from there, he just started springboarding off into like absurd nonsense. Like he was talking about undoing transactions if the government decided that they were illegal. So either literally rolling back transactions, or if that couldn't be done, just noting on the blockchain that this token is no longer legitimate and should not be recognized as such. And that's completely contrary to the entire design purpose of a system like this. Like it's the exact opposite of what it was designed for. And then really his specific answers to the questions on Ethereum, like mostly they were just him making legitimate criticisms of Ethereum and then attempting to use that as a way to slip in comments on Bitcoin Core hijacking things. And the one thing that stuck out with me specifically was him trying to equate any fork as creating a new asset and airdropping it. And he did this in a way to try and imply that because new features were put into Bitcoin, that it's no longer Bitcoin because it changed and it was people issuing a new asset and trying to kind of imply that this was in violation of regulations. When in reality, everything that's been done to Bitcoin, the system was specifically designed to allow. Like, and I find it funny that he's outright claiming to be Satoshi in this and is completely ignorant of Bitcoin's design in that way. There were numerous undefined opcodes that, if used undefined, would just automatically make a transaction valid as long as it wasn't inflating the supply. Like it would just there. It's true, it's valid, spend. And it was designed like that so that those opcodes could be defined with new restrictions and slowly phased in by new nodes that actually enforce something there instead of just blindly accepting it as true. Like Bitcoin's core design was specifically architected in a way to account for them. And I find it very hilarious that he's trying to argue the exact opposite to justify the I am Satoshi, like Bcash is Bitcoin and Bitcoin Core was hijacked. It's an illegal airdrop. And he's pretty much trying to position himself to sick regulators on Bitcoin by carefully starting off with a legitimate argument and then using that as a springboard to legitimize a bunch of horse shit after that.
Yeah, I don't even really know what to say about all this because you guys are right. I mean, Faktoshi's kind of, he's just gone off the deep end there. I mean, like I saw him tweeting at Jamie Dimon whenever we were talking about that JPM coin. He's like, "Oh, you're violating a patent of mine, Jamie," and just like, I mean, he's gonna keep doing this for like Janice saying, I'm sure for the next couple months or however long he could keep his funding coming through Calvin. And I mean, I've even seen Calvin tweeting some stuff about, oh, nobody challenges Faketoshi, he's like the man and nobody's even stepping up to him. Come on. This is like, yeah, I mean, at least like, he's kind of just, as long as he keeps talking, he's going to at least keep showing that he doesn't really have a full grasp on everything. I mean, like you're saying, I mean, there's some technicals there where he can definitely get the crowd listening, but I mean, if he keeps talking, eventually people are going to be like, all right, this guy doesn't know what he's talking about.
Well, the thing that I'm curious about is he says at the end of the comment that he is willing to, I don't think he used the word testify, but he's willing to talk to the SEC or the CFTC under oath. But I don't know exactly what kind of penalty. I don't know if there even is any penalties for the fact that, I mean, like, obviously he's not Satoshi. He did say testify?
Mm-hmm.
Okay, so what I would be wondering though, like obviously that would be a later scenario if they agreed to that, but I wonder if he could actually face consequences for lying about his identity in this comment and misrepresenting his expertise.
Oh yeah, if he testifies under oath and he lies, that's perjury, and he could face charges for perjury for that.
Yes, but could he face consequences for lying in this initial comment, or is that because it wasn't under oath, it was just a comment that's not legally punishable?
I'm unclear, but if he actually testified and lied, then yeah, that's perjury.
Yeah, I look forward to that.
Mm-hmm.
Yeah. All right, where are we at now? We got. All right, looks like we're at new all-time highs with the block size.
Yes, sorry. I keep forgetting what I have 2 in a row. So I believe around this time last year, Segwit adoption by number of transactions was somewhere, or not even transactions, I think they measured it on this chart that is linked by the number of payments, which is outputs. And so it was somewhere around 12 to 15% this time last year, February 2018. And it shot up to 30% and above in March 2018. Between May 2018 and today, Segwit adoption has been hovering around 37 to 40%. So now it's going above 40%. So that's great. We're almost 50%. Who knows how long it'll take. We still have a bunch of like major services who haven't enabled Segwit addresses. So that's pretty stupid. Like, what excuse do you have now? Blockchain.info, all of you guys who haven't done it, who said you were doing it and said you were done, like what, the beginning of 2017 or something like that, and you still haven't finished. You know, it doesn't take 2 years to educate your support staff, or you should hire some different support staff. Another thing is that Bitcoin's daily average block size has been fluctuating around 1 megabyte since the start of 2017, which obviously it started going above 1 megabyte occasionally after the initialization of Segwit, but it has recently reached 1.3 megabytes, even while transaction fees remain relatively low, considering the major spikes that we saw in 2017. So that's pretty interesting.
Yeah, I mean, that'll keep moving along. Like Bitcoin J just merged Segwit finally recently, so that'll spur a lot of adoption. But yeah, I guess in the interest of time, I'm going to really buzz through these last two because we are sneaking in a surprise special edition right after we get off the air for this. So Visa and Mastercard have both announced that they are going to be hiking transaction fees for merchants who process payment cards. And well, not announced, but that was stated. And then afterwards, a spokesman for Visa, at least, said that fees will only rise for banks, not merchants. But the reality of this is banks' costs go up. They're going to raise merchants' costs to cover some of that. And then merchants are going to raise prices for consumers to cover their raised costs. That's how things work. When costs go up near the top of a chain, they ripple down to the end. And they're pretty much claiming that this is for security measures to prevent fraud and theft. But as a little context, last year, their net income rose, both of them, by around 33%, as well as a court ruling that is going to see both of them in net, I believe, pay out $6.2 billion for losing an antitrust case for artificially inflating fees for payment processing. And there's still an aspect of that case ongoing that wasn't simply concerned with compensation for past fees, but is actively trying to push for changes in practices to prevent pretty much a duopoly from manipulating the fees that merchants have to pay to actually have their payments processed. And so this, I think, is going to really, I don't think actively in and of itself immediately start driving any kind of flood into the crypto space, but I think it is definitely going to start making a lot of people unhappy with conventional payment mechanisms. Because, I mean, this is just a perfect demonstration showing that these effective monopolies have total control over what the prices of things are through processing fees and how those get passed along to the consumer in the end. Crickety comments?
Just I'm with you, man. I mean, the more financial censorship we see, the more people are going to start moving towards Bitcoin.
Mm-hmm. All right. And then I guess jumping along real quick for the last one. Grayscale, Barry Silbert's investment trust for Bitcoin exposure, has pretty much seen a record high through 2018 of investments around 359 million. Although quarter over quarter, the inflows have dropped by around 60% to around $31 million in the last quarter. But there's been some interesting behavior change in the last quarter, despite the overall drop in total amounts coming in. There's been a huge growth in Bitcoin investments, which for the last quarter was pretty much 88% of everything invested in Grayscale products, as opposed to 67% through the other quarters in 2018. So there has been a huge shift in terms of people preferring Bitcoin over all their altcoin investment products. And as well, they've seen a huge growth in terms of institutional investments as well as retirement accounts. So pretty much retirement accounts have been around 15% of Grayscale's investment throughout the year, but jumped to 40 during the last quarter. As well, institutional investors accounted for around 50% in the last quarter and around 66% through all of 2018, with the rest being made up by family offices and accredited investors. So through 2018, Grayscale has seen a big profile in their customers shift over towards retirement accounts and large institutional players, which I think is kind of showing that even without things like an ETF, without backed, like a lot of these players are still moving to expose themselves to Bitcoin in the limited ways that they can right now. And I think that this is something Barry is on the ball with when he says that, you know, over this year, this is probably going to be a huge snowball effect in terms of institutional investment in the space starting to pile up exponentially. Alrighty, and I guess that's it for the day. So we've got about 5 minutes left for final comments and final thoughts.
All right, so yeah, I've been running the gun here on some stuff in the background, but I do have a final thought. I watched this talk yesterday. It's the state of Bitcoin, the current state of Bitcoin fungibility by Nopara at Advancing Bitcoin. And yeah, it's really good presentation. Just want to point everybody to it. And, you know, if you haven't seen that, just go give it a watch.
All right, Janine, final thought, cough it up.
Let's see. Let me check. And I usually just grab my final thoughts from my Twitter timeline. Okay, I have a funny one. It's not really Bitcoin related. It has to do with some weirdness with cars in Berlin. If you've ever been to Berlin, you know that a lot of the streets, especially in some areas, are lined with cars, and it's almost impossible to find a parking space. Basically, there are probably more cars along any given street than there are apartments. I would, or at least I would guess. And apparently there's a company or cooperative that tried to set up a tiny house, which you can see there in the picture. And they were told by authorities that they cannot park their tiny house there because it takes away important car park space, which is hilarious because literally the entire street is cars. Because streets in Berlin are relatively wide, but they end up being almost down to a one-lane street just because of how many cars there are. So it's kind of impressive how people can still drive down these roads when they have 2 rows of cars, a row on either side. But yeah, struggles of the tiny house life, people.
All righty. And before we get off the air and jump right back into a surprise special edition with Rodolfo Novak, I have a public service announcement for everybody. Something of grave importance related to national security. Guys, birds are not real. They're not real. They're government surveillance drones. It's time to wake up, everybody.
You stole this from CCC. I already talked about this several episodes ago.
But on that note, we are disappearing for now, and we'll be back in 5 to 10 minutes, folks. So toodaloo, see you then.
Later, everyone.